Welcome to Carpe Dime, a podcast about personal finance and everyday life. I'm Jamie Davidson.
And I'm Nicole Jackson from Financial Center First Credit Union. Thanks for spending your free time listening to us talk about how life and family affects us achieving our financial goals. Doing pretty good. Yeah.
Today we're going to talk about houses. You have a house?
Yes, house.
How long
About, I think it's like 12 years. Yeah, 12.
Yeah. I think we're coming up. Actually, it's going to be our 11-year anniversary coming up soon. So
You should throw it a party.
I don't know about your house, but my house could use some updates.
Ours was built in 1920.
Yeah, that's probably some charm there. Mine was in the 90s, so
It's a little more timely.
everybody liked the 80s and 90s, but some things about the 80s and 90s are just like, ugh. So we've got some projects that we want to do. Wife's got some dreams and aspirations. I don't know.
You want a porch? I want a porch.
You want a porch? Who's out there listening to this podcast?
Dustin.
Dustin, Nicole wants a deck.
This message comes from Capital One. The Capital One Venture X business card has no preset spending limit, so the card's purchasing power can adapt to meet business needs. Plus, the card earns unlimited double miles on every purchase, so the more a business spends, the more miles earned. And when traveling, the Venture X business card grants access to over 1,000 airport lounges. The Venture X business card, what's in your wallet? Terms and conditions apply. Find out more at CapitalOne.com/VentureXBusiness.
What can 160 years of experience teach you about the future? A lot, especially when it comes to protecting what matters. At Pacific Life, we've helped people and businesses confidently embrace the future with life insurance, retirement income, and employee benefits. With strategies built on strength and trust, and a promise to be here for you today and tomorrow. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
We need to redo a bathroom because the floors have gone bad on it. It's just stuck in the 90s.
I'd love to add a bathroom.
Would you?
Yes, I only have one. There's 4 of us, we have one.
That's rough.
It's like living in the 1920s.
So now that we're talking about these things, I mean, this podcast is about money. So the question becomes, we got a lot of things we want, but how are we going to pay for it, right?
Yep.
And I think you've done a little research. What are we going to use for that?
Your home's equity.
Home equity, also known as the HELOC, the home equity line of credit. Yeah, that's where a lot of people, when you go and you need to do some things to the house, that might be the place you want to look to, right?
Yes.
And I know you probably came up with some facts there, didn't you?
Just a couple. Yeah.
What'd you find?
Well, let's start off with the fact that only 17% of the public right now think that it's a good time to buy a house. So if you aren't buying a house, why not update the one that you're already in?
That feels like it might be new to you, right? Yeah, that's good. I like that idea. That's not usually an American way, but I like that idea. Let's update it. Yeah.
Recycle concept. Reuse.
What did you find?
More than half of American homeowners say that they're concerned about their home's ability to meet their family's needs or lifestyles in the next year.
You said you needed
a bathroom.
Nicole's the only female in the house, so I bet it can get a little bit rough there. Did you find anything else?
Yep, the last one is a third of American homeowners are not aware that their home equity can even pay off their consumer debt.
They don't, and it's really important to know this because credit card interest rates or APRs can be extremely high.
Yeah, I think I've got one that's like 25%.
Yeah, most of them are in the 20s, 19 to up 29.99. So the idea that you can actually get this home equity line of credit that actually is going to have a much lower rate, something you might want to look into.
So like consolidate your stuff into
consolidation of debt into one spot, one easy payment. So what is a home equity line of credit? You want to know? We call them in the business HELOCs, right?
Right.
This really gives you the ability or the leverage, the ownership stake you build up in your home to use that. So you're borrowing against that equity in your house. So I'm going to do things in an easy manner, okay?
Mm-hmm.
Let's say my home's value is $200,000.
Okay.
It's worth that, but I only have $100,000.
Right.
So the equity in the home I have is $100,000. So I can borrow some of that equity to pay for these items. So as opposed to going out and using a credit card with a high interest rate, maybe I just need to, like you said, consolidate a loan. Mm-hmm. Or not only that, but I decide, hey, I'm going to redo my bathroom. So instead of using my credit card to redo the bathroom, I take out the home equity and I'm paying a much lower interest rate.
Mhm.
Very cool, huh?
That's pretty cool. So
Uh,
how does,
How does it work?
well, that's what I was gonna say. How
I
does it
don't
work? No, HELOC. A HELOC is a revolving line of credit.
Okay.
So basically, you have a variable interest rate, kind of like a credit card. But when you are approved, you're given a limit based on what your home's value is, and you can spend and reuse and spend.
You use it as you need it,
Hmm.
and you pay up a little, pay some, pay it all back, use it again.
Yes.
That is super cool.
And I think you can typically borrow up to like 85% of your home's value minus what you currently owe.
We when we went through 2008, when the housing market sort of
Yeah.
took a dive, one of the things people were doing wrong, there's nothing wrong with home equity lines of credit. They're good if you use them the proper way.
Mhm.
But you had some institutions that were letting people borrow over the value of their home. So please, if you're going to somebody right now and they're telling you can borrow over the value of your home, do me a favor. Turn around, walk out the door, because you don't want to do that, right, Nicole?
Right.
That person's not being honest with you. They're selling you your dream, but they're going to put you in so much debt.
You will pay for that out the
You're
nose.
gonna pay for it. You will
Mhm.
pay, that's for darn sure. So we know what a home equity line of credit is for, as we call it a HELOC.
Right.
So let's talk about that. There's obviously, like anything we talk about, there's pros and cons. So give me did you find any pros?
Yeah. Obviously, there's
Obviously, with Nicole, you know she did.
the first is the flexibility. So when you have it, you are able to maximize your money. You don't have to use all of it at a time, but it's an option for paying for ongoing expenses as well as unforeseen emergencies.
Yeah, let me explain that. So let's say we're doing something in the house, right?
Mhm.
And we've got contractor A and contractor B and contractor C, right? I didn't just give all the money to contractor A. So I can use my HELOC as a credit card, pay contractor A when they're done,
Mhm.
pay a little bit up front if I need to, and then the same thing with B, as opposed to just saying, here's X amount of dollars and giving it all to them.
Right.
Which is sort of like what you do with your mortgage. So it's very flexible, and you know what? You can go to contractor A and talk to them, and you end up realizing maybe you shouldn't go with contractor A. And it's a good thing you didn't give contractor A all the money and you didn't pay him because you didn't have to.
Right, exactly.
Another thing about this is pros are, you can actually do interest-only payments on HELOCs. A lot of
You
people
can?
don't know that. Yeah. During the draw period, for the first 10 years, you're only required to pay interest on what you use from that line of credit. This keeps your payments low, freeing up cash for other expenses or goals. Now, I'm saying you can do this. I'm not saying that's always the best way to go, though. It just depends on where you are in your budget. Once again, it always goes back to what's in your budget. Obviously, some people are going to give you more money than you should have, and then you're going to get yourself in trouble, and then you're going to call me and say, "Help me get out of debt." So you can do interest-only payments, but you don't have to. You can pay the whole thing, including your principal.
Cool. Another one pro that we have is lower rates. We kind of already talked about the fact that your rate for your HELOC or your home loan is going to be lower than your credit card, but your HELOC again your HELOCs are backed by the equity in your home, which is act as collateral for the debt, which is unlike an unsecured debt that you have.
Say collateral.
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 Collateral. But you have collateral for your home as opposed to the unsecured debt instruments like your credit cards, your personal loans, anything that doesn't have anything backing it up. So that having that collateral makes a loan less risky to a lender.
Right. Which is why you're gonna have a lower rate too, because it's that collateral. Now, I can tell you some things that I love about these. The rates where you can do the interest only payment. Uh, and you hate it when I do this because you're like, don't put current time what's happening because
Yeah,
you're gonna
don't
get
do
it. But I'm going to. Because we have seen the values of homes go up so much over the last 3 years. I don't really foresee them going down in a drastic measure.
Mhm.
So this is a good thing that if you're borrowing off your home, your value of your home is probably going to maintain its value or it's going to go up. So you're not going to get the point where, we've talked before about being upside down. Well, you shouldn't end up being upside down when it comes to a HELOC or your mortgage because the values of homes have continuously gone up over the last 10 years in the United States. So, sorry I went there, but had to. Which, another thing when we're talking about ownership, and, we're talking about pros, is your home equity line of credit can actually give you a big potential tax deduction. The actual interest you pay towards it, as long as you're using that to improve your house, you can take that off of your taxes.
It's a whole other topic,
It's a
Jamie.
whole other topic. I am not a tax accountant, so please don't take my word as gospel, but yes, you can use that on your home improvements.
The last pro that we have is the fixed rate options.
They are offered out there, and it is a pro. I prefer fixed rates, especially, the environment which we've seen over the past at times. That being said, though, if you do go with the fixed over the variable, which we're going to talk about here in a minute, it's going to be a little bit higher.
Right.
You got to make that decision, which takes us to the cons of the variable. So it's kind of hard to say if the fixed is a pro and the variable is a con. They both have a little bit in that.
Yeah.
Because the variable being a con is because it's going to go up depending on the market. So if the overnight rates keep going up, your variable rate's going to keep going up. So that might be why you want to go back to that idea of the pro being you have a fixed rate. Yes?
Yes.
Yeah, we're Americans. We like fixed rates. What's another con?
Well, it's secured by your home, which means that it's tied to the equity of your home, which means if you decide that you want to leave your home, that's something else that you have to pay off in order to get out from underneath the debt that you have.
Right. Another con is the repayment schedule. Payments change after interest-only period to include principal and interest. What we see a lot of people is they get used to paying only the interest, which we called a pro. So, I'm only paying the interest, so I'm only paying $100 a month. Well, I've been doing that for 10 years, and that's what my budget is, and then all of a sudden it switches over, and next thing you know, I'm paying $500 a month.
Yeah.
You got to be aware of that. That's going to happen. So remember, it's usually a 10-year draw, 15-year payback, and you can only do the interest only, but I recommend you look at both options when it comes to that.
And then the last con, is the possible fees.
Yeah, you might have to get an appraisal. There might be some fees that they add in there. HELOCs usually run, $300, $500, maybe some other places a little higher. If you are shopping for a home equity line of credit, things you want to look at are rates. You want to try to find the lowest rate you can.
Mm-hmm.
Obviously, ease.
Right.
How easy is it? But sometimes we go for the easy and it's not always the right way. So make sure you're doing your homework. Use your resources, like Nicole said. Nicole would call Miana, and that's our resource, right?
Mm-hmm.
And, just be prepared for the fees.
Right.
Look at the fees. Some companies are going to offer some low fees or no fees. So make sure you're doing that. But if they're offering no fees or low fees, they might be charging a higher interest rate. So make sure you're gathering all that information together.
Don't be afraid to shop around.
Don't be afraid to shop around, right? So I think, Nicole, it might be time for us to start looking at home equity lines of credit for our houses because we need to update them, right?
I think so.
So you're going to do a patio?
I would love to.
And you're going to do...
I want a fence, I want a patio, I want a new bathroom.
Sounds like you need to do a honey-do list to me.
Yeah.
Yeah, we need the bathroom and we want to redo the kitchen. So when it comes time, we're either going to save our money and do it with cash, or guess what we're going to do? We're going to get the home equity line of credit.
Borrow from the HELOC.
Carpe Dime is presented by Financial Center First Credit Union. It's produced by Jamie Davidson and Nicole Jackson.
Financial Center is an 8-time national award winner in the category of adult financial literacy, and our goal is to what, Jamie?
Help improve your financial life. To learn more, visit us at fcfcu.com.
Like what you hear? Subscribe to us on Google, iTunes, SoundCloud, the All Indiana Podcast Network, and Spotify.
You know what, Nicole? Thanks again. Did a great job today. I love it when we get together to do these, and I know you're going to do a great job of editing.
Oh.
She's the cutter, slicer the cutter. That being said, thank you everyone. Have a great day.